Peter Rose, Longwood Currency Trading. Good morning. It's kind of a chilly mid-September 2021 day. The title of the video is Slow Makes Fast, Soft Makes Hard. That's something that I've taught in karate, and it's actually a Chinese saying that's applied to martial arts, well, a lot of other things too, but in martial arts, slow makes fast, soft makes hard is how you move and train your body in order to generate power. And my biggest teaching in martial arts, but with my physics background and stuff that I brought to the table for my students, was teaching power dispersion theory. You know, when you make that contact, are you just doing this? Are you bang? Are you really smacking into it? And there's all kinds of equations and stuff that go with that. But it all boils down to slow makes fast, soft makes hard. And it's directly applicable into the trading world. By slow makes fast, it's the same thing as if you're going to learn how to type or play piano or do karate or anything else, is that you practice these movements very slowly. If you can practice this movement very, very slowly, which is a palm heel strike, slowly like this, then when you've trained your muscular action to do that, then you can do that. Shake the camera so you probably don't see it, doesn't make any difference. I did a video earlier about the difference between fast and quick, and I was doing an exercise against my 25-year-old grandson where I was reaching out and touching his nose, so you might want to check that video out if you're interested in this sort of thing. But the principle of taking it easy and going slow so that you build up the muscle interaction that is necessary to travel this path or to travel these paths, or I played classical guitar for many years, to work through the finger combinations that you need to form in order then to really go faster, as I showed in the martial arts things, is to move that thing fast, but to have the same consistency. You know, I've said many times on this channel that the way to grow a big account is by having a lot of money, not by taking the small amount of money and trying to grow a big account. If you have a small amount of money and you're doing the trading well, you do still need to take an inordinate amount of risk, 5 to 8%, let's say, in order to grow to a larger account. Or you're silly and you're playing with 200 to 1 leverage and you get lucky. But you'll eventually lose all that. But nonetheless, there's no quick road to it. So when I teach somebody trading, when I teach somebody karate, teach somebody anything, because I'm an educator, I show them how to do it very simply and very slowly. And then with time, you build up to the point where you can do that very fast. In trading, it's the slowness is working with a $1,000 account, for example, until you're able to reach certain consistent metrics in your trading, and then you open a full lot account. I don't advocate micros at all. I think that's just stupid. If you're playing with micros, you probably shouldn't be trading. $1,000 is a good account level because it'll hurt. If you lose 30 bucks, that's 3% on 1,000. I mean, phew, wow, you're, you know, that's a pizza. You're going to notice that, right? So you learn to trade on that $1,000 account so that you're consistent. And then you open a $10,000 account so you can trade a full. And then you repeat the exercise at the $10,000 level that you did at the $1,000 level. Because your mindset changes from, oh my God, on a $1,000 account, it was just a pizza, to, oh my God, it's $300, it's $300, which is a day's pay. So you build good habits slowly and precisely through a series of exercises and training that I'll put somebody through. Yeah, you don't need me, you can do it yourself. You just have to have a little discipline. But you work on that $1,000 account until you're confident in that. And then you make the jump to where the money will start to work on your emotion, and you just work with that $1,000 account, $10,000 account. Don't get fancy and open a $20,000 or $50,000 account like I did. Open a $40,000 account and get it wrong and lose $40,000 or $50,000. I'm still recovering from that, and because and I've explained this in several videos. I mean, you lose big like that, you question a lot of things, and so I've had to go back and trade smaller, much smaller, even down in trade minis for a while after I recovered from that, in order to rebuild the foundation. But I've got other habits, as I have expressed in other videos, that I need to solve those. I've got the rules and the mechanics to do that, but it becomes, it becomes a psychological thing, and an ego thing too. I mean, fine. But you work with that $10,000 account until you can replicate the same success and positive metrics that you had when you were trading a $1,000 account. And once you're able to do that at the $10,000 account, all bets are off. Now you can go to a $20,000 or $30,000 account. You can start doing splits. You can start staging. You can pull off, pull on. You can do reverse ads, all kinds of exotic types of trading. Maybe if you're silly, you could trade multiple currencies. I don't know why you'd want to do that, but I've got a very successful video out there, why I only trade one currency pair. You may want to check that out. It's probably the most watched video that I have. It always has been since it's popped up. But the importance of what I started out to mention is this slow makes fast. You just have to take the time. You will look at the nature around us, and that's how we learn how to type, and like I said, piano or guitar, or even to drive a car. You need to take that time. Why is it that so many beginning traders throw a couple of $3,000 into their account, and then they go crazy because that's all the money they can come up with, and then they go crazy with that, with no mentorship, only watching YouTube videos, or some fool that got lucky at 200 to 1 and he's trying to teach you what a fucking Bollinger Band is. I mean, it's just craziness. It's very difficult for you to put the blinders on and put all that stuff out of your minds and step back and say, what do I need to do? What's the key here? Now, I've got the analytical tools and the background to do that. I've got a degree in physics. I spent 33 years as a senior software engineer writing business applications. I got 40 years as a real estate investor. I've been doing martial arts since 1968. I've got all that background. So it's not only simple for me to implement this stuff, but it's easy. But I don't purport that anybody that doesn't have my type of background can make the thing easy. It is not easy. But I can show you how to make it simple. The problem is that somebody will talk with me about training. And first of all, it's very expensive because I don't have time to spend with 400 people. So if you really want to sit down and do it, and they say, oh no, it's too much money. Well, excuse me, but wait a minute. What are you trying to do? Trade mini lots and make an extra $100 or $200 a year? I'm working with the folks that are trading 30 to 100,000 or bigger six-figure accounts. That 21 to 34-year-old age group that's looking to trade that size account, and they don't know how to get there. You don't know how to get there because of two things. One, you're making it more difficult than it is. It's simple. And number two, you don't understand the interaction and the correlation between your psychological makeup and what you're trying to do from a mechanical standpoint in actually executing the trades and evaluating the positions. And so you need to learn how to deal with both of those things. And you're not going to learn that from a book. And you're certainly not going to learn it from these idiot, their ball caps on sideways and the gold chains that are driving around in their Lambos and going like this with a wad of money. Those are idiots. I don't care whether they made money trading or not. They're idiots. That's not the person you want to learn how to trade from. because they're not serious. Oh, they got lucky, or maybe they are really smart, but they've fallen in with a group of people that are acting bizarrely and only trying to get your money. If you're so successful and all you want to do is drive around in your Lambo, why are you wasting your time trying to write courses or trying to do, trying to get trading rooms together? It's because you want to make money. You want to make thousands and thousands of dollars, but you don't know how to do it trading. And so you go and you do courses, and you get trading rooms, and you get Discord groups, and you get membership things, and you get all this other kind of crap, and you got more money rolling in than you know what to do with. There's one guy that's got a signals group or something. I just heard about this. $40 a month. He's got, oh man, I think, what is it? 100 or 200 people? Do the math. 200 people at $40 a month. The money is unbelievable. And here's the danger. Listen to me. I'll give you a little other advice, a little off the track of this video, is how a lot of these guys in these signal groups make their money. If currency pricing is random, which it is, there is structure to chaos and randomness, but that's a topic for a whole other study, and you have to have some mathematics in order to understand it. But if you're just looking at the price at any given time, it's got a 50% chance of going up and a 50% chance of going down. If you have no skill or ability at all, it's jump ball, yeah? So if you don't have any skill, then you take half of your subscriber group and tell them the price is going to go up. And you take the other half of your subscriber group and tell them the price is going to go down. Well, half of them are going to lose their money, they're going to call you an idiot, and they're going to leave. But the other half made money, they think you're a fucking hero, and half of those people will bring somebody new in, and you're also out there advertising, and you're bringing somebody new in. So now you've increased your group from where it was to 150% of where it was. And that's how they do it. And if you think I'm shitting you, I don't know. I don't know what to tell you. Slow makes fast, and soft makes hard. What about this soft makes hard? Well, again, we look at the karate training. You get the slowness makes fast because you can accelerate that muscle. But the softness is a process of, when we talk about making contact, this is power dispersion theory, we talk about making contact with somebody, we make this contact softly. And that soft contact that we make, this gentle movement, then becomes that simply through a psychological manipulation of our internal energy, our chi, which is, you can call that foo-foo stuff, but I can describe that through the laws of physics and mathematics. So it's not foo-foo, it's the real deal. But soft does make hard, if you know what to do. Otherwise, it just becomes good. Slow makes fast, soft makes hard. Coffee's good. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.